Hey guys, welcome to episode 33 of the F.I.R.E Fund Fridays series. Let me start off by saying it's been a weird week in the markets for sure. We had a worst case global scenario happen, and the markets reacted accordingly for about 24 hours, before completely U-turning, which blindsided me out of nowhere. I actually woke up late on Thursday, so I missed one of the biggest buying opportunities that has shown itself in the last 12 months. There was a 3-hour window to buy in, and I pretty much missed the whole thing. Let me show you exactly what happened in this week's F.I.R.E Fund update. On this channel, I talk about all things finance, wealth building, and how you can achieve the life of your dreams through financial independence. If you want to join me on this journey to financial independence, go ahead and hit that subscribe button. Alright guys, let's take a look at what happened to the markets this week. On Wednesday night, a worst case scenario happened, and that caused global markets to sell off like crazy. The sell-offs hit the US markets by 6 a.m. on Thursday morning, and the biggest buying opportunity of the last 12 months showed itself. If we actually look at the Dow, we have not seen these price levels since March of last year. It created a buying opportunity for those who were prepared, and unluckily for me, I did not wake up in time to capitalize on this opportunity. I know one of our viewers was able to buy in at incredible discounted prices, so cheers to you. I thought I might have another chance to buy in the next day, but the market decided to completely rebound by Friday morning. Not only did I miss my chance, the stocks I wanted to buy were already back to their weekly price levels. The market is actually so crazy that my portfolio ended up in the green for the week. This kind of proves the theory that the markets are more afraid of the possibility of negative events happening than they are of the actual events when they happen. Anyways, what's done is done, so let me go ahead and walk through my purchases for the week. I started things off by picking up 3 shares of Starbucks this week. I saw them drop below $90 a share and I had to jump in. The 3 shares actually rounded out my position right at 100 shares, so I can sell cover calls on it now if I wanted to. But I most likely will not because the options premium is pretty terrible. The 3 shares I did pick up increases our annual dividend by $5.78. After that, we saw SCHD drop to $73 per share, which was actually the only stock I was able to pick up right near its bottom on Thursday. I was actually pretty shocked because I have not seen this price in almost a year, which was when I first purchased SCHD at about $72 per share. I knew I had to jump in on this opportunity. I could only afford 4 shares for the week, which brought the total in the portfolio up to 15 shares and increases our annual dividend income by $8.29. After that, I was able to pick up 4 shares of QYLG when it dipped into the low $27 range. I would have bought more, but with the whole Nasdaq just melting, I was actually hoping that this stock would have dropped a little bit more. So that's why I only picked up a few shares. I was holding off hoping for a better price. The 4 shares of QYLG I did pick up brings the total in the portfolio up to 38 shares and increases our annual dividend income by $10.99. After that, we have our usual purchases of RYLD and QYLD. RYLD did drop a lot on Thursday, but it did not actually break below the $22 per share mark, so not too much of a missed opportunity here. I did think that it was still a good opportunity to pick up RYLD at about $22.50 per share, so I bought 21 shares, bringing the total in the portfolio up to $395 and increasing our annual dividend income by $55.17. And lastly, we have my biggest regret of the week. QYLD actually broke under $19 per share for a few minutes on Thursday morning. I've actually never personally seen it break under $19 a share before. I know it has done it in the past during March of 2020, but I've never personally seen it. So this was my biggest regret. If we look at QYLD now, it's back over $20 per share, and it's actually green for the week. Absolutely wild. The downside of living on the opposite side of the country is having to wake up at 6 a.m. if I want to catch the market open. And let's just say, I'm not a morning person. Anyways, I still bought up 28 shares of QYLD while I was in the $19 range, which brought the total shares in the portfolio to 421, and also increasing our annual dividend by $65.50. My goal was to own 400 shares of QYLD and RYLD by the end of February, and I pretty much achieved that goal. So it looks like this week we spent $1,698.89 on stock, which is much more than usual because I wanted to take advantage of the unusual buying opportunity. The purchases this week also increased our annual dividend income by a nice $145.73, which brings our total annual dividend income up to $4,737.94, which is a growth of over 3% over last week, and bringing us another step closer to our goal of $12,000 per year of annual dividend income. I also want to say that while this is a finance channel and we focus on what's going on in the stock market, we have to know that there are people facing a crisis in another part of the world, and I hope the people of that country are able to stay safe and get through these tough times. Alright guys, that's it for another F.I.R.E Fund Friday. I hope you're all able to buy the dip. If you enjoyed the video, please consider hitting that like and subscribe button as we learn to navigate this strange market together. As always, thanks for watching, and I'll see you guys on the next one.